Hey, welcome back to Two Super Guys Trade Stocks. I'm Dylan.
And I'm Vinny. And today we're going to talk about Sorcerer Powell, the chairman of the Federal Reserve, his latest crystal ball into inflation. We just got the data drop. We're going to see what it has to say about what's coming next for the U.S. economy. Boom.
Turmoil.
Two Stupid Guys Trade Stocks.
So Powell has been very transparent about this. Everyone's talking about CPI all the time, but he's like flat out said PCE is his preferred metric. In fact, core PCE is the one he prefers the most, right? So PCE data dropped this Friday. This is personal consumption expenditure, right? This is measuring where the dollars meet the road for where people are spending their money. And the real kind of headline numbers right here are in this bottom corner, like these two arrows are. So the headline top one that includes food and energy is 3.5% year over year, right? That's still well above the Federal Reserve's 2% target. And even more so when we look at the fact that core PCE is up 3.9%. That's still a little telling. It's the first time we've been below 4% since like November of 2020, though. So that's a pretty
Right.
sexy stat, right?
Yeah, that's pretty awesome.
Yeah. So we're going to dive into a little bit more because he's even given us a little insight into what aspects of PCE matter the most to him and that where we've seen results. So first thing here, this is how the mainstream media is kind of covering this. This is a CNBC article here, talking about the fact that it came in a little bit less than expected, and that's a good sign, and it really did move kind of expectations as far as rates. I'm going to show you what the expectations are here in another minute. Headline number PCE 0.4% on the month, 3.5% from a year ago. Inflation in recent months has been hitting 3.2% in June. So it's been come back up on this like headline number since then. We've seen a lot of increases in particularly in energy costs, with the curtailing of oil production. But that's been, the headline number rather than the core one, which is the one that Powell prefers as a metric. Not that it doesn't matter, but it's just a little bit less consistent.
Do
All right.
they not talk about the PCE excluding food and energy? Because that's like the really good number.
No, they do. This article does talk about both. Um, the kind of main idea being here, good, definitely some solid improvement here, but not out of the woods yet, right?
Right.
That's general consensus, I think, of most reasonable people when they look at this sort of thing. Pleased with overall direction, but declaring victory is a little premature still. In fact, it's really unfortunate because the first chunk goes away very quickly, but as we get closer and closer to our target, it's going to be a little bit slower to get there. So we're going to be stuck at this high interest rate environment probably for a little while. I'm going to do a separate video about some of the other things that may be facing that environment, but in particular, we're going to talk about this. So largely driven by energy costs, all right? Which accelerated 6.1%. So a 6% increase in energy costs. That's a little worrying for an economy that is cooled slightly and still facing inflation.
I mean, I feel like it's incredibly annoying because it's always just those two. It's always just like food and oil. It's just that I don't know the gas prices near you, but I'm back at $5.
Are you?
Yeah,
No, I'm pretty fortunate being close to the coast, so it's about 3.50 a gallon for gas for me right now.
yeah, it's stupid.
Yeah. So this is where the kind of trading numbers meet the road, right? This is the
Ah,
likelihood of rate hike at the next like two meetings, right? So the November meeting was originally at 27%, and then it came down to 15% following this PCE data drop. And for December, it was at 42% likelihood of a rate increase, came down to 31%. So it immediately chopped 11% off there. And what's that one? 12.5%. So definitely came in less than the market anticipation as far as requiring the Federal Reserve to act and increase rates. Right?
so if you had asked me a week ago before these numbers came out, I would say we are definitely having another rate hike before the end of the year. Also, he hinted at another one, and not at this last one. But he's like, we might do one before the end of the year, right?
So these numbers, these percentages are based upon options trading, right?
Right.
That's what the options for the Federal Reserve are. It's basically a betting market, right?
Yeah.
The Federal Reserve themselves have come out and the governors of the Federal Reserve Board in their latest dot plot did imply that they think there'll be another 25 basis points this year. That's like the kind of baseline for most Federal Reserve Board members.
So the interesting thing with that is if there is a government shutdown tomorrow, There was a couple articles I was reading that if it is a long, extended one, the odds of that rate increase shoot down dramatically.
Interesting.
Yeah.
That I mean, one of the issues that we'd run into potentially is that if this were to be extended significantly, this might be one of the last big data drops that the Federal Reserve has to go on before
Right.
making their next decision. That's a
How
scary thought.
stupid is that? Right? Like
Right.
they're trying to control inflation. If the government shuts down, they don't have the data they need to recommend a proper. It's so dumb.
I
It's
love it.
just such a stupid
Yeah.
system.
If you want to scoot yourself over here,
Oh yeah, yeah.
so and move myself up, there's a couple of things on here that I want to point out. So Powell has talked about the fact that we have seen goods inflation come down significantly over the last year and a half, right? However, we've still had a lot of issues as far as the services sector, right? Services sector is largely based upon salaries, and salaries did go up quite a bit during the pandemic for a lot of people, and they're continuing to still see inflation in the services sector. He said that's the hardest one to crack, and it will be the last one to fall. We're still, unfortunately, seeing some pretty consistent numbers in that area that are not going down yet, right? So this is the goods, durable goods, right? Negative 0.6%.
Yeah,
So
that's
that right
great.
there is price decreases, right? That's where we're seeing major headwinds be made on inflation. I don't know if you're, in the market or whatever, but if you've seen like the prices of refrigerators, say at like Home Depot, they've come down a lot because they're now trying to compete for your dollar. It's not like where it was 2 years ago, where it doesn't matter what the fridge does as long as like it gets kind of cold, you can sell it, right?
You know, I did not research my refrigerator graph plot before this one. I have it, but
Yeah.
was not aware of that.
Highly advisable. Services sector, continuing to see positive numbers like month after month.
Jeez.
This one did moderate a little bit from the previous measurement, but we're still seeing actual positive pressure in terms of price increases in the services sector. That one right there is based upon the actual where people's incomes are going, where people are spending their dollars. It was a 0.4% increase month over month from prior. Now, if we come to this one right here, we're looking at the actual price indexes, which is an idea of measuring comparatively for the actual product rather than where people are spending their money. This is what are the product prices doing? And you're seeing the same thing. Goods have come down, negative numbers, multiple negative numbers here, whereas you're seeing services continuing to be positive number month after month. It did moderate again slightly in August, which was a good thing. We'll have to see where the trend continues to go, but it's still a problem that services are having positive inflationary pressures and consuming more and more people's budgets. That's been ongoing now for a little while.
So I'm going to say this is always fun to do live in one take, regardless of
Ooh.
mistakes, because what I say right now could be very stupid. But wouldn't you expect services to start to regulate as unemployment increases?
Yeah, right. Because you'd be able to decrease the amount of salaries they're offering for the
Right.
positions. Therefore, the amount of like price increases that are built in from salaries within that service sector would be lower in theory. But that's definitely going to be a item that would take a while to digest because you think about how many steps there are in between when you see that number print on here versus when it's happening on the street, right?
Okay.
So
All
it's a
right.
lagging indicator. Is basically my point there.
Makes sense. All right, guys. Let us know what you think. If there is going to be a rate hike or not. Granted, the government shutdown kind of changes everything. So let us know.
Yeah. Catch you next one.